Good afternoon. Welcome to Midcap Radar. I'm Reema Tendulkar. With me, Sonal Boothra, and these are the top stories at 1:30 p.m. Stocks trade in a band ahead of the weekend after a volatile week. Capital goods industrials gain while autos slip. Midcaps outperform.
GMR Infra surges as its airport arm gets set to divest stake in Mactan International Airport for over 13 billion rupees.
Tanla Platforms jumps as the board gets set to consider a buyback when it meets next week. This comes after 65 crore rupee buyback that the company did last year.
Kajaria Ceramics slips amid a shutdown at plants in Gujarat's Morbi cluster until the 10th of September. July to August was tough for the industry, the management tells CNBC-TV18, while adding that the company expects to clock double-digit revenue growth in FY23.
Upbeat brokerage commentary gives Bharat Electronics a Phillip City raises the target on the stock with a buy call and is bullish on the defensive play.
All right, those are the top headlines that we are tracking at this point in time. Markets, they have continued to be very volatile, but for now, they are managing to be in the green. We have Nifty sitting with gains of 50 points at the mid-cap side of things, which were actually outperforming at a point in time, but now it's just up 0.2%. That's because Bank Nifty, that is the one which is outperforming all the major indices. Bank Nifty sitting with gains of around 170 points. However, if we look at the advance decline ratio, it is comfortably in the favor of advances, and a lot of mid-caps, of course, in focus, right? So let's go across to our segment Mid-Cap Movers, and we have Mangalam today with us to take us through the mid-caps that are moving around. Mangalam.
Well, a lot of them are indeed moving around in trade in today's trading session, but importantly, it's the hotel stocks that stand out with the kind of stellar gains that we're seeing out there. EIH, Royal Orchid, Kamath Hotels, Mahindra Holidays, Chalet Hotels, all of them up anywhere between 4 to 15% in today's trading session. But those aren't the only gainers in today's trading session. Tata Tele, the stock is up 55% this week itself. 15% gain for the third consecutive session. Ace is the other one which is down, up 9%. Lokesh Machines is the other stock which is up almost 35-40% in this week itself. And remember, this was a truncated week, so a few days and big gains coming by. Sheela Foam is the other one which is up almost 7.5%. Marathon Next Gen gaining for the third day in a row. Parag Milk up almost 5.5%. Astral is the other one which is up 6% in today's trading session. In terms of losers, there are far and few in between, and the losses aren't very deep. So you have Zomato, which is down about 3.5% after a big gain that we saw yesterday. So some pullback. Data Patterns down around 3% Hubtown is down 5%. The only outlier on in the hospitality and hanging out space is Wonderla Holidays, which is down about 3% in today's trading session. But it has a big rally behind it, so maybe some bit of profit taking on that counter.
Okay, all right. Mangalam, thanks a lot for all those stocks that are in focus today. But of course, it's our special segment, Midcap Spotlight. Reema, you are focusing on Tanla Platforms today.
Yes, the stock is higher by 3%. The company has announced that the board will be meeting next week on 8th of September, where they will consider a buyback. Now, the stock has been under pressure of late. Year to date, the stock is down 60% from its 52-week high. It's lost 65%. And ever since it came out with its Q1 numbers, which were a miss compared to street expectations, the stock has been plummeting lower. Now, this news has given the stock price of Phillip. As I said, it's currently up 3.5% ahead of the buyback announcement expected on the 8th of September. Now, the cash in the books is quite rich, close to about 1,000 crores, 987 crore to be precise, as of the June quarter ending. Recently, in the company's annual report and in the AGM, they also announced their dividend policy, where the company said that they will be paying 30% of their consolidated PAT as dividend every year. But what we understand is that the payout, this buyback, is going to be over and above the 30%, which is going to be paid out via the dividend and not a part of it. So that in itself is a positive. Just keep your eye on the size of the buyback, because the previous buyback, which took place last year, was a smallish one, 65 crore. It was an open market buyback at a price of 1260, but it was a small buyback. So I think markets should temper their expectations. Given the size of the last buyback, and secondly, because as I said, this buyback is going to be over and above the dividend that they plan to pay out, which is about 30% of their consolidated PAT and not in lieu of the dividend.
Okay, so of course, cash usage is something that they'll have to watch out for. Thank you, Reema, for that intake on Tanla platforms. But let's now go across to the management of Kirloskar Pneumatic. Remember, the stock has done well. It is very close to its 52-week high level. So we have with us Mr. Suhas, who's the Vice President and Chief Financial Officer of the company. Now, remember, the company manufactures air, refrigeration and gas compressors and systems that account for around 95% of sales. And the three segments that they have is air compressors, refrigeration and gas as well. Mr. Suhas, thanks a lot for joining us here on CNBC-TV18. Well, let's start with one of the segments, that is air compressors. So earlier, the entire market size that we were talking about here was around 3,000 crore rupees. Now it's revised to around 4,000 to 5,000 crore rupees. What is your current market share here in the air compressor segment? And does this segment enjoy higher margins? What is the growth outlook here?
Sonal, if I can put it across, in air compressors, there have been multiple technologies which have been in use, like reciprocating compressor and screw compressor and centrifugal compressor. Kirloskar Pneumatic had been predominantly present in reciprocating compressors, and in last couple of years we have been adding screw compressors and centrifugal compressors as well. We have developed these products on our own, and now we are poised to look at this market very positively. One of the significant achievements that we have had in the last year, when we supplied close to about 700 screw compressor for generation of oxygen to fight the COVID. So this has been quite encouraging. The market is growing. Market is growing almost at the pace of GDP plus. Main focus has been oil and gas and chemicals and textiles. So this is where we see opportunity for the growth in the coming years. Air compressors market being pretty large. We have a very niche share as of now.
What is your share? What is your share?
I would put it around 8 to 10%, not significant as of now. Because we have very recently introduced our products in screw and centrifugal, which are hitting the market, and we should be able to gain a good share.
Okay.
So in the newly launched products, could you tell us what the order wins have been like? What is your current order book? And if you could break that up for us.
See, we have had, as of 1st of July, when we announced the quarterly results, order board of, or the order book, as you may call it, as close to 1,200 crores plus. And we have more or less the order book spread in proportion to our sales between air, refrigeration and gas. About 20 to 25% would go into air, about 30 to 35% would go in refrigeration, and about 40 to 45% would go into the gas compression. KPC is essentially focusing on oil and gas and has got significant share in the gas compression market. So we would always look at, gas industry, oil and gas industry, a positive note.
Okay. So considering that you're saying it caters to oil and gas industry, growth is strong, and you are launching new products and you are niche player in a lot of those segments as well. So what kind of growth are you expecting in all the three segments? Say air compressors, where it's 25% of total revenues, you have refrigeration, where you have 50% total market share itself, and also gas. Put it together, what kind of revenue growth will you expect, say 2 to 3 years down the line?
See, we have declared aspirational target of 2,000 crores in next 2 to 3 years' time. So depending upon the whether it's a headwind or a tailwind, we believe that we should be able to achieve this growth from the existing 1,000 crores. For the first time in March 22, we crossed the figure of 1,000 crores in terms of top line, and we are close to 1,200 crores orders in hand. So that encourages us to, post a good growth in the current fiscal as well as in the subsequent financial years also. If you look at Q1 performance, we have got close to about 60% growth over the previous year. So we believe that we will have a 20% growth coming up in this financial year.
Okay.
So this 2,000 crore of an aspirational target, is that would be on?
We are talking about 2 to 3 years time, because we have basically concentrating on oil and gas sector. The air sector segment is a relatively new entrance for us, but we have looked at it and we are quite pleased to look at the overall performance of our air compression division in the last year.
Okay.
And we believe that there is a good potential of growth coming in the coming years.
So exports right now is really small segment for you. If you can quantify what it is, and are exports a higher margin segment for you? If that proportion increases, what will it do to your margins? You're sitting at a base of 10% in Q1. Will you improve or will you stay at those levels?
Historically, our exports level have been at about 20 to 25 crores. We have been working on the exports for the last 5 to 6 years. We are focusing on, again, oil and gas sector in the Middle East sector, Middle East countries. This involves a process. You can't get the orders overnight in these sectors. You have to look at first the approval process with EPC contractors, consultants, end users, etc. Then a lot of inquiries start flowing in. We may or may not be successful in the initial stages. However, all these efforts have now resulted into a good export order board of close to about 100 crores in this year. We would cross 100 crores exports in the current year, and as we speak, we have already crossed about 60 crores in the exports.
You're saying exports will be
significant
100 crore versus 20 to 25 crore historically, right?
Yes. So this year we will definitely cross 100 crores. Yes, it's a big jump and quite encouraged, and we have got a proven track record now, particularly in the oil and gas sector.
Mr. Kolhatkar, a quick word on the margins, and do you have an aspiration on the margin front as well over the next 2 to 3 years?
We have been, 95%, as you know, of our total business comes from the compression segment. And we will have about, we have been having about 18% EBITDA margins in the compression segment. There are a couple of other businesses which are, as of now, cooling down a little bit. And at company level, we have got close to 14.5% to 15% margin. With the volumes growing up, we should be able to get improvement in the margins, and that's what we believe.
Okay. All right, Mr. Suhas, thanks a lot for joining us and giving us all those details. That's the word coming in from Kirloskar Pneumatic. They expect to double their revenues in the next 2 to 3 years, and double-digit margins is what they're expecting in coming years. Slip into a short break now. Up next, we'll be joined by Mr. Shashank Srivastav of Maruti Suzuki to discuss auto sales in detail. Stay tuned. Welcome back. You're still tuned into Midcap Radar on CNBC-TV18. Well, let's talk about auto sector now. Maruti reported its August sales below street estimates, and although company's exports saw a growth this time. We have with us Mr. Shashank Srivastav, Senior ED Marketing and Sales at Maruti Suzuki, joining us now to discuss their August auto sales and the business outlook as well. Mr. Srivastava, thanks a lot for joining us here on CNBC-TV18. Well, your sales were at 1.65 lakh units in August, which is up 27% on a YOY basis, but it is lower month on month, and this is despite the strong order backlog. Any particular reason for this month-on-month slowdown that you can explain?
No, actually, it's the number of working days for production in August were less. There were 23 days against the normal 25, 26. So I think that explains that small drop. Otherwise, as far as the availability of semiconductor components is concerned, it was at similar levels. And as you just said, we had pending bookings, in fact, crossed 400,000 at one point of time during the month, now stands at 377,000.
Okay, so even exports have slowed down to 21,481 units, which is up only 4% on a YOY basis. Is there any pressure in the export markets as well?
Not really. If you see the first 5 months, the total exports been 111,000 against 87,000 last year. So that's actually a pretty strong growth. Last month, 21,500 against 20,600 of the previous year. I would say the base is pretty strong. For last year was the highest ever exports from Maruti Suzuki. In fact, we ended up being #1 exporter for passenger vehicles with 238,000 units. And we expect the exports to be in the same range, slightly higher than last year. We haven't really seen an impact of the global economic scenario so far. Maybe the effect can probably be seen with a lag. So I'm not sure about that, though. At the moment, it looks as if we are going in pretty strong, even compared with the last year's strong numbers.
Okay, so FY23 exports seen better than last year, and as of now, at least, there has been no impact of the uncertain macros, but you remain watchful. Are you seeing any slowdown in the entry compact segment demand and also any slowdown in the CNG variants given the sharp rise in CNG prices?
So CNG vehicles demand, you are right, is basically depend on the differential of the fuel price between gasoline, diesel, and the CNG. And in the past few months, because of the geopolitical situation, we have seen this gap coming down. Logically, CNG demand should soften in response to this, but we haven't really seen that. We have seen CNG demand roughly similar. We still, out of those 377,000 pending bookings, about 125,000 are CNG vehicles. But I've always maintained, and I would like to repeat here, that the real underlying demand will be known once the production increases. And thankfully for CNG vehicles, we have started increasing that production. As you would have seen this month, we sold 31,000 plus CNG vehicles. So I think going forward, we'll get to know the real picture. At the moment, it looks that the demand hasn't really dented. But logically, it should once the differential comes down more than what it is today.
Okay, so generally, what is the overall outlook for September and October? From this level of 1.65 lakh units, what kind of run rate can you guide for, say, the next few months?
I can't really give you the exact, projection, the forward-looking numbers. However, I think the chip situation is becoming better, although it is still not 100%, and I don't expect it to be 100% okay for the next few months. However, with the strong pending bookings and the festive season coming around, I do hope that we will be able to get to very good numbers during the festive season. One point, though, mentioned before as well, that really the production is the overall numbers is one issue, but more importantly, I think is model-wise production. It should be in line with the underlying demand pattern, and that I believe is what is going to give us the full impact going forward for the festive season. So if we are able to produce as per the underlying demand pattern, we can see some really strong numbers.
Okay, so optimistic about the festive season demand. So I wanted to talk to you about the utility vehicles. While Maruti is focused on recovering back lost share, but year to date, we're yet to see a pickup in market share for Maruti in the UV segment. Is this in line with your expectation? And when can we expect a pickup in market share for Maruti in UVs?
So the utility market share has picked up a few percentage points, actually about 210, 220 basis points for Maruti Suzuki. However, this level still remains small. And the reason is that while we have unveiled the Grand Vitara in the mid SUV segment, which is a pretty strong segment, it's about 18% of the overall market, we haven't really started sale of those vehicles. The production just started towards the last week of August, and we are yet to start dispatches of the Grand Vitara. Probably the dispatch of the Grand Vitara will start somewhere around mid-September, and we will be able to launch the vehicle towards the end of September. And that would then start reflecting in the uptick in the market share. The uptick in the market share in SUV, the 220 basis point that I'm referring to, has happened largely because of the new Brezza. So the Brezza has been doing well. So far, we have crossed the 106,000 fresh bookings for the new Brezza. And that, I think, is a pretty strong going. But then Brezza last year also was good. Overall, in the year, did about 115,000 units, 116,000 units. And it was the leading entry SUV even last year.
Okay, so can you give us a sense of what is the waiting period on some of the best-selling models for you, Brezza, Ertiga, Baleno, etc.?
The waiting periods actually is the highest for Ertiga, then the Brezza and the Baleno, as you mentioned, as also the Desire. Baleno, by the way, we have increased production quite a lot. And in fact, Baleno was the #1 car in the industry this month, that is in August, after a long time, because WagonR was the #1 for a very, very long time. And Baleno now has become the #1, although by a few extra numbers over the WagonR last month. So it's going strong. We do hope that going forward, we'll continue this trend with the new Baleno.
And just one final word, any color on the rural versus urban split in terms of demand? Rural has been growing faster than urban in the last few months. What's the situation now?
Yeah, interestingly, this year, after many years, the urban demand seems to be the growth seems to be similar to the rural growth. Otherwise, the rural growth has always been, for the last 10, 12 years, always been higher than the urban growth. This year so far is roughly similar. Last month also, it was the same story. Actually, rural grew a little more than the urban areas last month. But I think there is no one sentiment in the rural market. Certainly, the monsoon on an overall basis has been about 7% up over the long-term averages. So that's good. However, there are some states like Bengal, Bihar, Jharkhand, Eastern UP, Northeast, etc., where even Haryana, where the rainfall is a little bit short. However, if you look at the overall basis, Kharif sowing just a little less than last year. So I think the sentiment is still positive. Although I suppose it will also depend on how the economy shapes up overall going forward.
Mr. Srivastava, thanks a lot for joining us and speaking with us about the outlook going forward and for the industry and the company as well. With that, we'll slip into a short break now. A quick reminder for our viewers, it's that time of the year again. Money Control Pro's Financial Freedom offer is back with added benefits. Get a Money Control Pro subscription at net zero cost by claiming exciting offers worth 1,500 rupees from our partner brands. Grab the benefits now only on the Money Control app or website.
Welcome back. Inching towards 17,600 on the Nifty. The start was flat, but we've picked up in the last 2 hours of trade on the Nifty now. We're at the high point of the day virtually. The mid-caps, though, continue to remain pretty flat, just a gain of close to about 0.2%. So there is no upward incline that you can see on the mid-cap index, as you can see in the front line path. That said, there are many mid-caps which are buzzing around. Take a look at something like EIH. That's up close to about 15-16% on very large volumes. The ADAG group stocks continue to be active this entire week. Reliance Home is up close to about 40% this week, but it's a 5 rupee stock. Reliance Power, a 22 rupee stock, but again, it's been a 40% up move coming through for that stock. Reliance Industrial Infrastructure has been another big mover with a gain of close to about 8%. So, that's a pocket which is fairly active in trade. But let's get you some market opinion. Earlier today, we caught up with Rajat Bhattacharya, Senior Investment Strategist at Standard Chart, and he says that the ROE is higher in India versus other emerging markets. Listen in.
India has traditionally had high PE multiples. Why is that? Because one is, of course, growth, and you got the latest India growth data as recent as this week, and you saw where growth is in India, plus 10%, right? And whereas, for instance, China, they actually had a quarter-on-quarter contraction in second quarter. Looking forward also, China will recover, but India sits right up there in growth. The second feature that we maintain about India is that the Indian corporates managed to capture that growth better than other emerging markets. And that is why you see the corporate earnings growth stronger than other emerging markets. The return on equity is higher in India than other emerging markets.
That's all the time we have for you on Midcap Radar. Thank you for watching. Your stocks when we return.